Good morning, champions. Good morning, RDOs. Good morning, everyone. I'm so glad you were able to join us for this champion conference. We appreciate you more than you know, and you certainly are more valuable than we could ever express. How valuable is the champion program? There's a lot of ways we can demonstrate that, but here's one. Take a look at the number of new unit openings in the last 10 years. Now, of course, there was a huge jump in 2019 when Unidyne joined Compass, but that's also a great example of how essential the champion program is. How do we set up and train and support 450 new openings, continuing to support over 2,000 existing operations, all with about a dozen fast team members? We don't. We can't do this without the champions. Look at this year. The 151 openings between the two sectors, that's just January through May at the time we gathered this data. Not even halfway through the calendar year. So think about this though for a moment. Turnover. We track all new hires by position and we send welcome emails to all these potential eFinance users, directors, retail managers, chefs, any other position that would use eFinance. This fiscal year, as of May, we've had 774 new hires in Morrison Healthcare and Compass Living that were eFinance users. It's staggering, but it's also inspiring to see the impact of this champion program and see how it helps ensure that managers aren't alone in their onboarding journey. They have this valuable resource like you to guide them through the complexities of their unique contract, their unique billing process, and help them manage their business. But of course, you don't want me to just spend the entire conference gushing over you. Well, maybe you do, but either way, we also did come here to learn, and that leads us to our first subject, client billing. This isn't our first rodeo with client billing training. Those of you who have been in the champion program more than a few years know that this subject has gotten coverage before. We're calling this presentation Decoding the Client Billing Conspiracy because we know that some of you may be starting to question, why isn't this process automated yet? Now, roughly 50% of our accounts are management fee contracts that are able to use the generated fee bill, but even then, a large percentage of those accounts still have to make a pre-bill. Why in 2022, with eFinance approaching 2 decades, are we still manually creating our client bills? Where are the robots? We've got robots to vacuum our carpets, right? We've got robots to drive our cars. Come on. Where are our client bill creating robots? Well, first, let's just keep in mind you can't just brush aside the exorbitant cost of self-driving cars. Custom development is not cheap either. And well, there are some potential downsides of vacuuming robots as well. I'm just going to let that one sink in for a moment. Take that into context when you think about the potential downsides of your client billing process being out of sight, out of mind. But I digress. Is automated billing worth pursuing? Absolutely. With an abundance of caution? Absolutely as well. And this process is being tackled by our development teams now. I don't have an ETA on that, but I can tell you that the first step is our P&L client billing detail report, which is one of the things we're going to talk about today. But we also want to make sure that all of you know the level of complexity and variety in our contract structures so that you can help our teams understand you have to know your contract. You have to understand your drivers, and you have to know how to interpret your data and examine your reports and verify data accuracy. We're going to talk about both management fee and P&L contract structures today. If you have experience with both types, great, but don't take this presentation for granted. I guarantee that you will walk away learning something new. And if you're only familiar with the one side, it's especially important that you pay close attention. As champions, you need to be aware of the potential pitfalls that our managers need to avoid. We hope to shed light on the client billing conspiracy, uncover the truth about all the complexity that goes along with our diverse set of contract structures, but not overwhelm you with information. So to do that, we're going to introduce fundamentals of eFinance that impact billing. And then we'll build on each of those fundamentals, which will hopefully give you some practical tips and tricks for helping your managers. So our presentation today is going to cover these basic areas. First, we'll talk about estimates and accruals. Then we'll break down management fee accounts by opening up the management fee codebook. We're going to engage you with an exercise in understanding the on-site fee bill. Then a walkthrough of the P&L client billing detail report. And finally, we'll wrap up everything with an intro to the client billing package feature in eFinance. Before we get started, I want to encourage you throughout the session. Any questions or comments, go ahead and put those in the chat window. We'll be taking breaks throughout the session, and that's when we'll address those questions. Now, the first part of our training is on estimates and accruals, a module that tends to trip up a lot of managers out there. We're going to try and simplify that as best we can because it's an important building block of accurate client billing. So I'm going to turn it over to my friend and teammate, Carrie Schmidt, who is going to walk us through estimates and accruals. Take it away, Carrie.
Thanks, Carl, and hi, everyone. I'm going to take some time and talk about the estimates and accruals module because this module is actually foundational to accurate client billing for both management fee and P&L accounts. For this session, here's what we're going to review. First, we'll define the purpose of the estimates and accruals module. Then we'll describe the 5 specific scenarios where estimates and accruals should be utilized. And finally, we'll do a quick walkthrough of the module and the available training resources. Let's start by discussing the purpose of the module. A lot of eFinance users, especially new users, are hesitant to use estimates and accruals simply because they don't know what it does or how it will impact the financial reporting. So in the simplest of terms, let's describe what estimates and accruals actually does and why it's important. Estimates and accruals is a module that you can use when you need to utilize a placeholder for an expense or revenue that will post to your financial reports later. And by later, this can mean either later this month on the FOS or later when the month closes on your final mom's P&L. The module is used to record financial amounts that don't automatically appear on the FOS. So what do we mean by automatically? Well, here are a couple of examples. When you record a vendor invoice in the Compass Paid Invoices task, then that expense will automatically post to your FOS. When your patient day or resident day driver is configured with a daily rate, then Recording Census will automatically calculate and record revenue on your FOS. But there are several examples of real financial scenarios that can't be represented through the typical everyday channels of your daily and weekly eFinance data entry. We'll give you some examples of those scenarios in a moment, but first let's address why proper use of this module is important. Managers and directors who regularly use estimates and accruals know that the module helps your FOS reflect the true financial status of your operation, giving you a better picture of your expenses and revenues throughout the month. If used properly, it can also reduce the differences on your P&L reconciliation. When you use estimates and accruals correctly, it improves overall financial and reporting accuracy, which is always a positive thing to strive for. But for this session, there are other important reasons we need to mention because they also apply to accurate client billing. And this goes for both management fee and P&L accounts. For management fee accounts, if your contract requires the creation of an on-site fee bill, then using estimates and accruals is sometimes needed to help know the correct amounts to bill at the end of the month. For P&L accounts, entries made in the estimates and accruals module will carry over to the P&L client billing detail report, which is an important topic that we'll talk about later on in this session. Now, to better illustrate how estimates and accruals is utilized, let's turn our attention to those 5 specific examples of why you would use this module. But before I outline those examples, I do want to mention that these 5 scenarios are listed in the Estimates and Accruals Quick Reference Guide, which is available in the reporting section of the eFinance TechSmart training site. This same information is also available in our FOS reference guide, as well as our P&L reconciliation reference guide. And of course, you can also find the Estimates and Accruals Quick Reference Guide by clicking on the Documents tab within the main menu of the conference app. And now back to our regularly scheduled programming. So the 5 scenarios that require you to use estimates and accruals are billing for a prior month's activity, billing the client for a contracted expense, recording revenue or expenses that are expected later on in the month on your FOS, recording revenue or expenses that are expected at the end of the month on the P&L, and recording client-paid expenses that are not client-paid vendor invoices. So let's dive down into the detail of these scenarios, but just keep in mind that the first two items I mentioned only apply to accounts that are a P&L contract. So first, let's talk about billing for a prior month's activity. In a P&L account, inevitably, there will be times when something doesn't make its way to the current month's client bill. And this isn't necessarily because of a mistake made by the director. For example, most of our contracts call for a yearly increase to our billable rates. And sometimes, client negotiations will delay the implementation of these new rates. So occasionally, we must bill our clients retroactively for these rate increases that may have taken effect one or more months in the past. Updates to our drivers will always be reflected on the FOS back to the beginning of the current open accounting month, but will never impact a close month. So to capture the revenue related to these billing adjustments for those close months, we need to use estimates and accruals. Next in our list is billing the client for a contracted expense. Let's say your operation needs a new piece of equipment, and you have a P&L contract that states that the client is financially responsible for the purchase of this equipment. This could be anything from a large appliance down to silverware or even kitchen utensils. Per the contract, you plan to bill the client for this expense at the end of the month, which will eventually become a revenue credit to your P&L. While the expense will appear on your FOS when you process the vendor invoice, the credit for billing the client will not appear. Not unless you use estimates and accruals to record the bill back of that expense. Now, let's move on to recording revenue or expenses that are expected later in the month on the FOS. There are times when you may be expecting a large expense to post to your FOS, but rather than have that large expense hit in 1 week, you want to spread that expense evenly throughout the month to avoid any misrepresentation of your estimated monthly expenses. This can also apply to any special revenue items that can't be captured through the standard methods of data entry. It is important to note that this example of using estimates and accruals is the only example where you are required to reverse your accrual. If you don't create a reversal accrual when the actual expense or revenue posts to your FOS, there will be a duplicate revenue or expense in that report, which will definitely skew the numbers on your FOS. We'll talk more about reversing these transactions a little later in the session when we review the training materials. Up next is recording revenue or expenses that are expected at the end of the month on the P&L. There are so many examples within this scenario that it's impossible to capture them all. But regular completion of your P&L reconciliation report will give you insight into the situations that require a special accrual for your operation. There are several types of charges that may post to your P&L that aren't going to show up on your FOS through data entry or through the daily import of accounting memos. One such example is the $15 charge that will hit your office supplies GL for each off-cycle check requested from payroll. There are a lot of other examples of charges and revenues that won't post to your FOS, but our accounting department is always working to improve processes and add these amounts as accounting memo entries so that these entries post automatically. In the meantime, it's important to complete the P&L reconciliation review and communicate with your accounting team to understand the expenses and revenues that may require the creation of an accrual. Finally, the last example is a client expense that isn't captured through client-paid invoices. To capture the true managed volume of your operation, you will need to record all expenses that apply to your location, regardless of whether they're paid for by Compass or the client. Now, if you have access to the vendor invoices paid by the client, then these invoices should be processed through the client-paid invoices module in eFinance. Keep in mind that there are some situations where an expense will be part of your operation that may come through another department, like materials management. And you may not have access to the actual invoice. So this is a good reason to use estimates and accruals to record that expense. Now, I know a lot of you have already used the module, but there's always a few in the crowd that may not have needed to use it yet. So let's take the knowledge that we've just shared and apply it to a live example of creating an estimates and accrual entry. Now, like every other task in eFinance, using estimates and accruals starts with the effective date calendar. The date we select from the calendar will represent the date in which the expense or revenue will post on our FOS. Now that we've selected a date, we'll scroll down and select the task labeled Enter Estimates and Accruals. From here, we enter our transaction. The first selection you make is the GL code. Not sure which GL code to use? Well, there's a handy table on page 2 of your guide that lists the specific GL codes to use based on the reason for the adjustment. Next, you'll enter the dollar amount for the transaction, followed by a description of the transaction. Now, be sure to include details of your description so that you can easily understand the entry when you look back at your records. The next selection is for bill or accrue, which we'll cover in our next section. And finally, the last 2 fields are optional. If you want to spread your expense throughout the month, or if you want this amount to appear weekly or monthly, you can select for this transaction to appear daily, weekly, or monthly. And if applicable, select a day for this repeating expense or revenue to stop repeating. And once you click Save Data, the amount will appear on your FOS based on the GL category you selected and the date you selected from the effective date calendar. All in all, it's a pretty straightforward module when you bring it all together, but remember these important points. The transactions you record in estimates and accruals will only appear on your FOS and other reports within eFinance. They will not carry over into your month-end P&L statement. If you are accruing for an expense or revenue that will eventually post to your FOS through another module, then it's important to create another transaction to reverse the accrual when the actual expense or revenue hits. Instructions for reversing accruals are conveniently located on the quick reference guide in its own section. And one last note, to accrue for an invoice or expense that you expect to post in the next month, you should use the AP Accruals module. A separate quick reference guide is available for this module, and it's also covered in our EVIA training. Now let's turn it over to Carl, who will review some of the finer details, including what to choose for the bill and accrue selection.
Thanks, Carrie. Hey, everybody. And if you see me with my glasses, that means it's time to do an exercise. So we're going to do a bit of an exercise. And after that, we'll address any of the questions that may have come up in the chat. So let's just review quickly, what is an accrual? We have to know that because we have to remember that not everyone's immediately always understanding terminology. If you're going to give the official textbook definition, then you would say something like an accrual is a revenue earned or an expense incurred, although cash has not yet changed hands. But that's going to be a little confusing for a manager in our world because they may never actually see the cash itself. The best way we can describe an accrual for the way it's used in eFinance is it's a placeholder for a revenue or expense that's expected later. We talked about the specific scenarios where they might be used, and that's all listed on our estimates and accruals quick reference guide. The same information is available on the FOS reference guide as well, and the P&L reconciliation guide. So what we're going to talk about now are those 3 choices that each manager must make when they use estimates and accruals: the GL account selection, whether they select bill or accrue, and finally, whether they should enter a positive or negative number. The first thing, the GL account selection, that's all in the guide. So just refer to that table. It's going to answer which GL to use when you make an accrual. So we're going to focus on that next selection of bill or accrue. And here's why it's important. Because before the P&L client billing detail report, that selection had no impact on any reporting within eFinance at all. It was just a note. But now that we have that P&L client billing detail report, this selection determines what appears on the report and what doesn't appear on the report. So for what we're talking about right now, this selection mostly does just apply to P&L accounts, but we still want to train everyone on the right way, no matter which contract we're talking about. So here's the basics, and here's your guide on how to answer the upcoming questions, which are going to come through the quiz tab. And think of yourself for these as a P&L account in this exercise. You would select bill if this item is going to go on the client bill. You would select accrue if the item is not going on the client bill. It's that simple. But we're going to test you, and that test will also depend on how quickly you answer the question bill or accrue. Here's how it's going to work. If you're logged into the web app on your computer, again, you'll see that quiz tab to the right, just like we saw before. Go ahead and click on that. You're not going to see that join button yet. You're going to see that join button in a moment when I progress the slide. If you're viewing this through the mobile app, remember you go to the quiz option at the bottom. So I want to make sure, though, before we get started, that you see the words MHC, CCL billing at the top, not introduction or data accuracy. Sometimes because of cookies, those fun things, it may actually cause it to have a different question set up. So make sure that it says MHC, CCL billing. If it doesn't, you can click and change that to that, but keep it on MHC, CCL billing. And so for right now, we're going to start to see that join button pop up here. And so go ahead and click that join button, and we should start to see some people joining the quiz now. Okay, good. Excellent names are coming through. I know that we've got somewhere around 80 some people joined this session right now. So I'll just give a few minutes here, a few seconds of really, shouldn't take you too long to click that join button, but I do have to progress onto the next slide eventually here. You may be able to join in a moment. So we're going to give some quick questions here on just whether you would select bill or accrue. I could see right here we have 68, 60, okay. And let's see if we can get to 70, and I'll click the next question. So the question that's going to come up is going to ask you to select bill or accrue based on a particular scenario. So here's our first one, bill or accrue. If you're adding a line to the client invoice for a smallwares purchase, select bill or accrue. Remember to click on send. And you only have 20 seconds to answer. Make your best guess if you don't know. The time in which you answer is also a factor here. Adding a line to the client invoices for a smallware purchase. Again, client invoice should indicate that we are doing a bill, and we had a 99% accuracy there. Who was first? Who was in the leaderboard? Rachel. Congratulations. All right. We do have some heavy competition here, so everybody could answer here. All right, so for here now, we're going to go on to the next question. It's going to come up in a second, so be aware. Next question is, recording a fee for off-cycle checks. Is that bill or accrue? Bill or accrue? We're in a P&L account. We're in a P&L account. Bill or accrue? Okay. Go ahead and keep, I've got 11 seconds left on the timer. Go ahead and put those correct answers in, and make sure you click on send. Okay, almost everybody has answered. And all right, and our correct answer was accrue. It's just an expense going in, not getting billed to the client. And our Rachel is still at the top here. She is just on that. I can see it. All right, everybody here. We're going on to the next question. Bill or accrue. A large P card purchase has not yet imported, but you need that expense to hit. Are we selecting accrue or bill? All right. Okay, and we've got 6 seconds left here. 5, 4, 3, 2, 1. And the correct answer was accrue. And we are getting that expense on there. 86% who has taken the lead. Up, Amber, you've moved up in the list here. We are awarding points here for different places as well. And last question. You undercharged floor stock last month and plan to adjust this month. We're talking about a P&L account here. All right. Bill or accrue, bill or accrue. All right, we've got just about everybody answering, 75 out of 81 here. All right, everybody can get in almost, okay. The correct answer was bill. We do bill for floor stock in a P&L account if we're talking about that. All right, we have a 81% were correct. And Rachel, you have won the top spot here. Amber, second place. Luann, Melody, and Catherine. Absolutely great job here. So we're going to move on to the next the next part of this, but awards will be given out through the chat by the game master, right? I believe. Okay. So next thing we're going to talk about and focus on is positive or negative. Do they give a positive or negative number? And this is important because especially when we talk about the P&L things, P&L client billing detail report of things that are going to go on the bill. Here's our framework for making that decision. It's a little different if you're a P&L or fee. One of the factors is how does this impact the bottom line, positive or negative? And if that's different, we're talking about a P&L versus fee. In a P&L, the question is, how does this impact my, meaning Compass's bottom line? Or if we're talking about a fee, then it's how does this impact my client's bottom line? Keep that in mind as we share the next graphic. This graphic is actually on the Estimates and Accruals Quick Reference Guide, and here's how it works. The columns going from left to right across the top represent the category, whether it's a revenue or expense, and if the rows represent the impact to our bottom line or our client's bottom line, whether it increases or decreases. So if you got a revenue category that would increase the bottom line, both for a Compass P&L or our clients, then we would enter a positive number, right? But here's the other thing, is that sort of flip side, is let's say you have an expense for which you are accruing. The only way you're going to enter an expense that's going to increase your bottom line is if you enter a negative number, otherwise known as an expense credit, right? Again, the whole point is that this is all on the Estimates and Accruals Quick Reference Guide. First, so we're going to actually take a moment right now to open it up for questions. I have with me, off camera, make sure, Joe, if you could, our technical expert, make sure Carrie's mic is up. Is Carrie out there? Hi, Carrie.
Hi, everyone.
Hi, thanks for Carrie for joining us. Carrie, just wanted to check with you real quick if we had any questions come up on the chat yet.
We have not, Carl.
Okay.
Not about estimates and accruals, anyway.
Not any questions about estimates and accruals. I had one question I know from Ken Vaden that we talked about yesterday, is just sometimes how do I reverse an estimate and accrual? We had questions that come up about that. If you're ever needing to reverse, it is on the guide, but one of the tricks about that is that you do have to go back to the last time that it occurred and make sure that you find that date. That date actually has to be open and you can delete it on that date. So if there's no questions, again, we'll encourage you to ask those later. We'll open up at another point, but I'm going to go ahead and turn it back to Carrie, who's going to go over the management fee codebook. Take it away, Carrie.
Hello again, everyone. In this section, I'm going to pass on the key to a cipher of complexity. So I present to you the management fee codebook. As I share the contents of this declassified document, it's important for our agents of change to remember this. As an eChampion, it is crucial to be familiar with and know the key components of both management fee and P&L contract types. During this session, you may be saying to yourself, I handle a P&L contract. This information doesn't apply to me. And in fact, I was actually in that situation. That was me. Because when I was in operations, my units and the remaining ones in my region were all P&L accounts. But just keep in mind that as of now, about 63% of accounts in your sectors are actually management fee accounts. Since you may one day be called upon to assist those accounts like I was, or maybe even run one of those accounts, it's crucial to know the basics of billing for both contract types. And it's especially important to know the most common issues and how to avoid them. So to decode the management fee bill, we'll need to cover the following topics: the definition of a management fee contract, the basics of the generated fee bill, the complexities of the on-site fee bill, the prior month adjustment, and finally, we'll prepare for an exercise where each of you will calculate the total of an on-site management fee bill. What's that? There's a quiz? Yes, there will be a quiz. So that means be sure to pay close attention and remember to ask questions utilizing the chat window as we proceed through the session. As we've mentioned before, we will be taking breaks throughout the session to answer your questions. So don't be shy and be sure to use that chat window. So let's get started with a basic definition. Within P&L accounts, we bill the client based on activity, like census, meals, floor stocks, and a host of other transactions based on the language found within the unit's contract. In a management fee account, we bill the clients back for purchases. So things like our food, our labor, and direct expenses, they get billed back to the client. And on top of that, we bill the client a management fee. At the same time, we may have incentives and penalties in a fee contract, and those incentives and penalties may be based on activity. Now, in these management fee contracts, there are expenses that are identified in the contract that cannot be billed back to the client, and the specific categories vary from contract to contract. These categories are classified as below the line, and a specific series of GL codes are used to capture these expenses. But again, just keep in mind that the simplest distinction between a P&L and a management fee contract is that in a management fee, we bill the client back for expenses. It's important to note, sometimes managers and RDOs will refer to their unit as a management fee because they bill the client a fixed amount each month. But this is misinformation. Fixed revenue billing still indicates a P&L contract. The only way to be truly categorized as a management fee account is if you bill the client for all Compass paid expenses, except those that fall below the line. Now that we understand the basics of a management fee account, there are still two important distinctions that need to be made when talking about how the fee bill is created or retrieved. There are two groups of units to distinguish: those accounts that can use the generated fee bill and those accounts that must create an on-site fee bill. Generated fee bill accounts can retrieve a bill that is automatically generated on the 6th working day of the following month. Because this is the same day that the final P&L is generated, the amounts on this generated fee bill are actual amounts from the SAP accounting system and are a true reflection of the activity at that unit for the month. Accounts that use the generated fee bill are sometimes required to create one or more pre-bills for their unit, which must be done manually, but those pre-bill amounts are automatically credited on the generated fee bill at the close of the month on the 6th working day. This method of billing is used by almost 80% of our current management fee accounts within our sectors, and the instructions for the pre-bill and generated fee bill are pretty simple. You may guess what I'm going to say next. We do indeed have two quick reference guides that are available, and both are just one page. So we have one guide that reviews how to create a pre-bill and another guide that reviews how to retrieve the generated fee bill. There are some obvious advantages to this method, including improved accuracy and easy to follow instructions. However, there is a downside. With the generated fee bill, the line items that appear on the bill are standard for each sector. With that said, there is detail available in other reports at both the GL and transactional level, but not much customization is available for the bill itself outside of the logo and the client contact information. It also may be considered a disadvantage that you must wait until the 6th working day to retrieve the bill. For the other 20% of accounts, the instructions are more complex, but with the on-site fee bill, we can customize the line items on the bill we provide to the client. Also, we don't have to wait until the 6th working day to present the bill to our client. We can create our own bill as soon as the amounts are made available to us. But keep in mind that we now have a deadline. The on-site fee bill must be completed and finalized before 4:30 p.m. Central on the 2nd working day. Usually it's the client contract that drives the decision on whether we use the generated fee bill or the on-site fee bill. But either way, it's important as champions that you understand how this process works, as there are hundreds of managers out there that must complete this task every month. Now, before we dive into the complexities that make up the on-site fee bill, I want to mention that there is a detailed guide on how to create an on-site fee bill available on our eFinance TechSmart training site under the billing/month-end section. We won't review that guide today because in truth it's a pretty long document. And we do recommend that if a new director must create an on-site bill for the first or second time, that they schedule a walkthrough with their FAST team member on the 2nd working day. And we'll talk about why the second working day is important in a moment. For now, the first thing to consider when creating an on-site fee bill is, where do we get the information that's needed to create our bill? The answer is, of course, our FOS. But before we print our FOS, it's important to remember that infamous acronym GIGO, which stands for garbage in, garbage out. Remember, our FOS is only as accurate as we make it. So let's cover what needs to be done inside of eFinance before we can print our FOS to create our on-site fee bill. Then this can be summarized up into 3 different categories: user adjustments, timing, and data entry. First, let's talk about user adjustments. Remember earlier in the session when we talked about the importance of the estimates and accruals module? We must make sure that all adjustments are captured in estimates and accruals for any expenses that don't automatically post on the FOS. And remember, the only way to know which items appear automatically and which items you may need to accrue for is to complete your monthly P&L reconciliation review and communicate with your accounting team to understand all of the transactions that post to your operation. Next, timing is everything. So don't try to create your on-site fee bill until the second working day. And there's 2 very good reasons for waiting. First, the payroll cost calculation process doesn't run until 1 p.m. Central on the first working day. So your payroll won't be accurate until then. And secondly, P-card purchases for the last stub week of the month import into eFinance on the morning of the second working day. And finally, we can't print the FOS until all data entry is complete. This especially includes invoices, inventory, retail, e-transfers, and reclasses. Basically anything that will impact your bill. Remember that each sector has its own unique month-end data accuracy checklist, which is reviewed on our monthly data accuracy course on MyLMS and is available on our TechSmart training site. This checklist is designed to help ensure you don't miss anything that could impact your bill. So now we have our FOS that can be used to create our on-site fee bill. Is that all we need? I think you guessed the answer is no. We must also get a special number called the prior month adjustment. Now, what is the prior month adjustment, you ask? To understand this, we must understand month-end timing. The on-site fee bill is made on the second working day. The final numbers post on the 6th working day. This means that what you billed on the second working day may not be the same as the results that posted to the account on the final mom's P&L. The difference between these 2 amounts is called your prior month adjustment. This amount gets billed on the next month on a special dedicated line on the on-site fee bill template. Where do we get the prior month adjustment? Well, the best way to get this prior month adjustment is to be on the email list created by the Cash and Credit Department. Each month, the Cash and Credit Department emails the amounts of prior month adjustments to the directors that are in this contact list. It is important to use this prior month adjustment amount rather than trying to calculate the difference yourself. If you simply compare your on-site fee bill to your P&L, this difference may not include any unbilled adjustments from previous months. If you're in an account that creates an on-site fee bill and are not receiving your prior month adjustments in an email every month, be sure to contact your accounting supervisor to be added to the distribution list. There's an important point that should be mentioned about the prior month's adjustment. This amount is the difference between the total of the previous on-site bill and the total billable amounts on your final P&L. Does not provide any detail. This is one of the most difficult things for a manager to troubleshoot: which items were overbilled or underbilled that make up the total adjustment. The easiest way to address this situation is to save the FOS that you use to create your on-site fee bill. Either print it or digitally save the PDF. Once you save that version of the FOS, then you can compare it to the current FOS or the current P&L statement to see which GL categories contain the differences that make up the variances. This basic step is covered in another reference guide available on eFinance TechSmart training site called the Prior Month Adjustment Quick Reference Guide. So now we have our FOS with all of our data, and we have our prior month adjustment. We're ready to create our on-site fee bill. I just want to go over a few important rules for creating the on-site fee bill. Number 1, always select the correct effective date. We can't drive home this point enough. If you're billing for August, then you must select a date from August when you create your bill. Number 2, avoid billing any client revenue or client paid expense. These are represented on the FOS in the 79,000 GL range series. Number 3, all Compass revenue amounts in the 300,000 range must be credited to the client. Things like Compass deposited cafe revenue and the employee meal credit should be credited to the client. Number 4, if you have any non-cash billable sales as part of your Compass deposited cafe revenue, then this amount must be charged to the client. The reason for this is that non-cash billable sales are part of the total cafe revenue number, which per rule number 3, we are crediting to the client. Things like payroll deduct don't need to be credited back to the client because the client already has that money. And finally, number 5, never bill for any below the line categories. Now I'm going to turn it back over to Carl, who's going to walk you through our on-site fee bill exercise.
Thanks, Carrie. And there I am with my glasses again, means we're going through an exercise. But we're going to review a little bit before we go on. First, the management fee contract. It means we bill based on expenses. And I know that we had purchases on the last slide, a little bit of a, it's technically expenses because especially if the contract calls for us to bill based on the inventory. We have different contracts, some that call for purchases, some that call for purchases with inventory, basically usage. So another, though, the point of that is that fixed revenue doesn't mean your management fee. So we want to make sure we eliminate that misconception. So the exercise we're going to go through today involves manually creating an on-site fee bill. It's important to consider that while about 80% of management fee accounts right now use the generated fee bill, that there are still hundreds more managers that have to create an on-site fee bill on the second working day. And so that's why it's important that we work on this exercise. Things to remember, we went through these as a slide already. Correct effective date, you're not going to have to worry about that today. We do not bill for any 790 series GLs because they're client revenue and client paid expenses. All Compass revenue is going to get credited on that bill, but if we have non-cash billable sales, that then gets billed because it's got to be taken away from that credit essentially. And finally, number 5, we never bill anything that is below the line. Anything B/L doesn't go on the bill. Now, we're going to gather our handouts. Remember these handouts that came in an envelope? Here, we're looking for MHC, CCL, client billing exercise number 1. So you want to get those handouts, both handouts available because you're going to go through 2 pretty soon. But have number 1 and make sure you're looking at the right one. It's labeled as exercise number 1. We got our client billing exercise. You can access these if you haven't already gotten them in your welcome package, your packet that was sent out. You should get it. But if not, use the documents link from the main menu. You can print it there as well. And I'll give you a few moments to do that. What we're going to end up doing here is exercise 1. I'm actually going to have a few of these notes up on the screen, but the timer is not yet started. What we're going to do here is that we're going to have a timer of giving you a total of 10 minutes. First off, there's going to be a timer for 5 minutes while this screen is up. And then after that, we're going to have the quiz tab open up, and this screen's going away. So what does this mean? So the exercise packet has a simplified version of the FOS that you're going to use to determine the amount of the bill. So you're going to look at each section and determine what is the amount that you're going to bill or credit from each section based on all the things we just talked about, as well as the information that's on the slide right now. And so the information that's on the slide right now, we want to read that. Let's read that together. Before we start the timer, what are the specifics of this exercise? Well, first, there's only one bill per month. We're not doing a pre-bill. So that means you're not going to have to credit a pre-bill on this amount. Next, we actually have to make a manual adjustment to this FOS because in this scenario, there are some travel categories that we are going to work with accounting to move below the line, but we haven't been able to do that yet on this printed FOS. So there's a couple of items in your direct expense section that you'll need to omit from the total direct expenses to bill, namely the travel category and the meals category. Don't make any assumptions about other things that might be travel. It's travel and meals. Now remember that you're going to credit revenue as you do any 300 series. And finally, there is a prior month adjustment. It's a negative 2,253. I put it in parentheses and a negative, so we were absolutely sure it's a negative. So anyway, we're going to keep this screen up, but only for the next 5 minutes. Joe can go ahead and start the 5-minute timer. So take notes on those items now and manually add those amounts to your printout. You're going to just use your pen or pencil and your calculator. We're going to set that timer for 5 minutes, and then another countdown timer after that 5 minutes is going to come up on the quiz tab. The quiz tab is not available yet, but it will be soon, and you'll have a choice of 4 answers once that comes up. But again, this slide's going to go away in 5 minutes here, 4 minutes, 35 seconds. If you got questions at any time, you can use the chat feature. If you can't see the chat feature, it might be because you're maximized. Just go down to the lower right, and you can, or I'm sorry, where is that at? Is it the lower right or upper right when we maximize? Upper right, thank you. Upper right to restore the screen. You can use the chat function as well. Any questions during the time, I'll be here. Joe will turn my mic down just for a moment, but we'll see if there's any questions. And go ahead and good luck. Hey everybody, Carl just checking in. Remember, you can enter questions into the chat, but the join button won't be there available yet on the quiz tab. We'll be doing that in about 2 minutes here. So for the meantime, just use your calculators and your pens to start adding up those amounts of what amounts should be going on the bill. Remember, we need to not bill for client expenses. We do credit the revenues. Quick note is that the prior month adjustment does come from the cash management department. I don't know whether we said a different department on there, but a cash management sends that out. But if you don't know that person to get on that list, reach out to us or your accounting supervisor. We can make sure. I happen to know who's the person that sends it out. Anyway, somebody from accounting can type that question into the chat, type the answer in the chat, who they can use to get their name on that list. But that, just want to mention that. We'll put up the join button in a second. Hey everyone. We're going to switch over right now. You can keep on adding it up. Don't worry about adding it. Keep on adding it. You're not limited. We still have 5 more minutes, so we're going to start once we actually start this Slido. But now we're going to have everybody join the quiz. You can click on join, but you got to make sure, of course, that it says MHC CCL billing. And in a moment, then I'm going to bring up the options. Just for now, so just click on join, and then you can keep on adding. I'm going to give a few more minutes here for everybody to click on join. And make sure, if you don't see the join button, then make sure it says MHC CCL billing above. If it doesn't say that, you can click on the words MHC CCL billing and select it from the list. Sometimes cookies will do that to us. We try to use this app to make it work here, but I do see about 61 out of how many right now? 91. Oh, we're getting up there. Everybody make sure you click on the quiz tab and click on join. And then I'll start another 5-minute timer here. Make sure to click on join now. If you don't see it, make sure you're on MHC CCL billing. We're almost there. Almost everybody's clicked on join. I'm going to give it just a minute here. Go ahead and click that. And yeah, but we're almost there. We don't have the timer, doesn't start until this goes. So I'm going to go ahead and click it now. So now we have our options that are going to come up. Maybe you've done some addition. You don't see your answer up on the screen. Do your addition again and double check your numbers. We've done a lot of double checking, so we hope that we do have it right here. But make your best guess selection. I have people answering already, but don't worry about it. I want to also just give you a quick side note is that when we pick the top winners, we're picking top 5 champions, and a top 5 accounting is going to go and get awarded too, but they're on a separate list. So I know that some of our champions are like, I can't compete with accounting. You're not competing with accounting. It's all right. They're competing with other accounting supervisors. But we want accounting to have fun as well. But don't worry about it. You're not in the same rank, we'll say. Any questions, you can type them into the chat, though, and I'll see if I can help you. Thank you. 2-1, everybody. I'm going on to show the answer. The correct answer was 160,013.61. I'm going to give the breakdown on that. But before we do that, of course, we got to show our leaderboard. Of course, we are just filled with accounting, but we do have, I can't show the other leaderboard with other accounting, with other champions. So know that there will be some champions that are awarded as well in the list, and you'll find that out through the Game Master in the chat. So here's how the answer broke down. The cost of goods sold, the total on the FOS, no difference. There's all three, they're all 400,000 series, so it all gets billed at 59,004,282. Same thing happens with labor. There's nothing to change about labor. The whole section of labor gets billed. Now, when we get into the direct section, that's where you have to take away, and you can look at your packet again, look at the direct section. We have to take away the client chemical, client equipment rental, laundry, office supplies. Overshort, sometimes that'll trip people up. When it's a positive number, we got to subtract it. When it's a negative number, you got to add it. But either way, it was a positive number this time. Less as well, those two things, travel and the meals. So the total billable directs ended up being $10,672.67. In the revenue section, there's one thing, the employee meal credit that does get credited to the client and the prior month adjustment. All that totals up to $160,013.61. Now we're going to move on to the next question, but here's the thing before I get to that next question, the next packet, you're going to bring out the MHC CCL client billing exercise number 2. And with this one, we're going to shorten up that first timer to just 2 minutes, all right, as we start to view this. But give me 1 second, Joe, before you start that. Let's go through exercise number 2. With exercise number 2, we're taking a little bit of time off, so 7 minutes total. You're going to have to figure this out. Let's read through this one here. Use the notes on the screen, but jot down the important notes on the paper as soon as possible, because once the timer starts, the slide's going to disappear. Here's our notes. At this time, we do have a pre-bill that you will credit. That's for $100,000. As before, remember to credit the 300 series GLs, but this time there's more. There's some non-cash billable sales. We talked about them before. They are included in that cafe sales number, so you have to add them back in. So technically, you have to add them back in actually without taxes, but no worries about calculating the after-tax amount. We're just going to provide that. So the amount you're going to add back in is 2,250. And last, there is a prior month adjustment, positive 65.55. Okay, so I'm going to actually click a button here, and well, I'm not actually not just going to click a button. I'm just going to let you go. Joe's going to start the timer for 2 minutes, starting now, and then after that 2 minutes, this slide will go away. And we will get the join button again on that. So go ahead and keep adding up exercise number 2. Hey, everybody, we're going to bring the join button up a little bit early this time. There's still 30 seconds on it. But go ahead and you can go to the tab, the quiz tab right now, and click the join button. Make sure it says MHC CCL billing before you do that. Are we seeing the join button?
Yeah, pre-joined.
Oh, you're pre-joined. Okay, good. It looks like everybody's pre-joined. So in 7 minutes, I'll bring up those that have already joined. All right, and now the question options are going to come up. So now you have 5 more minutes.
There's a man who lives a life of danger. With everyone he meets, he stays a stranger. Yeah, with every move he makes and every chance he takes, the odds are he won't live to see tomorrow. Secret agent man, secret agent man, they giving you a number and have taken away your name. Lying on the Riviera one day, lying dead in a Bombay alley next day. Yeah, with every move you make and with every chance he takes, the odds are he won't live to see tomorrow. Secret agent man, secret agent man, they giving you a number and are taking away your name. Take it away. Where are pretty faces that you find? A pretty face could hide an evil mind. Yeah, you let the wrong word slip while you're kissing sexy lips. The odds are you won't live to see tomorrow. Secret agent man, secret agent man, they giving you a number and are taking away your name. Take away your name. Take away your name. Yeah, yeah.
Hey everybody, got 10 seconds left. Make sure to go ahead and just submit an answer if you don't know, because it's coming through here. All right, and so the correct answer was, and we got 44% with the correct answer, 9,067 and 16 cents. All right, we're gonna just show the leaderboard here real quick. Again, I'm sure we're seeing a lot of accounting, but remember that we will have plenty of champions that we're gonna award as well. So congratulations to those accounting supervisors. Here's the answer here as I broke down, though. Cost of goods sold, we're taking out two different things, the client food and the client paper, to come up with that total, 75,447.26. The labor, taking out the client hourly and the admin charge as well. With directs, there's only one thing to lose, is the client chemical. And with the cafe revenue, we are adding the two taxable and exempt numbers, and you'll notice that the rest of those comp meals and things balance out. The payroll deduct is added back in. And then we had the billable, so the total billable revenue credit was there, the credit for the pre-bill and the prior month adjustment. So we have those, and again, you can review these. We'll have this, we have this recorded for you in case you ever want to go through those things again. Now we're going to bring up the questions tab right now. Just make sure Carrie is that her mic is up as well, Joe. Hey, Carrie, do we have any questions out there to address?
Hey, Carl, we did have one question come through, and this was, when does EVIA download on the end of the month?
Good point. So understand that as far as EVIA goes, the cutoff for month end is 3 p.m. Central Standard Time on the first working day. Anything that imports after that point is going to go into the next month. So that's your cutoff before creating the bill. always good just to wait till the second working day before creating the on-site fee bill with everything, and that will cover EVIA as well as those morning imports of the last P-card purchases. Any other questions, Carrie?
We do have a comment, and this is from Meredith. And this is, why don't we encourage clients to use the generated fee bill?
We do. We do. The whole point of this is just understanding that we want to make sure that managers, that the eChampions know that there are hundreds of managers that do this, and we want them to understand the complexity that goes into this. And maybe, if nothing else, doing this exercise makes you appreciate that you have the generated fee bill. Good point. And so, yes, talk to our sales team, Meredith, and we can make that happen, right? So, any other questions? Are we good?
That's it.
All right. Thanks, everybody. So, what we're going to do right now is we're going to turn it back to Carrie, who's going to go over the client P&L billing detail report.
Thanks, Carl, and hello again. I'm here one last time to introduce you to the P&L Client Billing Detail Report. As the name suggests, this report is available for P&L accounts only. But again, keep in mind that it's important for our champions to be well-versed in both P&L and management fee contracts. So even if you currently only support fee accounts, please pay attention, as this may apply to you sometime in the future. For some of you, this report may already be a regular part of your month-end routine. That's because this report has already been released to some sectors. For other sectors, it may be available, but you are unaware of it. And for yet another sector, this report isn't available unless you take action first. Let's explain by providing a little history. The P&L Client Billing Detail Report was first developed for the Unidyne sector when they joined Compass in 2019. With the implementation of this large new sector, it was necessary to create this report to help managers create a bill, because the bill creation task was previously handled at the corporate level. About a year later, this report was released to Morrison Living, but its availability wasn't globally advertised. Instead, it was introduced to managers on a case-by-case basis. We have just started releasing this report to P&L accounts in the Morrison healthcare sector, but we are releasing it only with approval from accounting and training from the FAST team, either at the system level or one account at a time. It's important to understand that even if you are already using this report, the information shared during this review is important because it may introduce you to concepts that will help you achieve and maintain billing accuracy. So please, make sure you stay tuned. So what is the P&L Client Billing Detail Report? Here's where we explain how valuable the report is. This report brings together all of the items that should go on the month-end client bill for P&L accounts. Before, this information was only available by accessing several reports. For example, for your patient or resident revenue drivers, you needed your FOS or other census or meal reports. For your drivers that are set as Compass billable, like meals, catering, or floor stocks, you needed your billable item summary. For your drivers that are set as Compass capped, again like meals, catering, or floor stocks, you needed your capped item summary. If you billed for or credited cafe sales, you needed your cashier checkup roll-up report. For your non-cash billable sales, you needed your non-cash billable sales report. If you made any special billable user adjustments, you needed your estimates and accruals summary report. If you credited client paid labor, you needed either your FOS or other ePay reports. And if you had any billable revenue that was the result of a user-defined calculation, again, you needed your FOS. So when you do the math, we're talking upwards of 8 separate reports that you had to save or print to get all of the information you needed to create your bill. So I hope I've got your attention, because this report is a game changer. Now, why is this report not immediately available for every P&L account? That is a great question, and it brings up an important point that applies to every P&L account from every sector. Remember our earlier discussion about GIGO, garbage in, garbage out? Well, the basic truth is that when we run P&L reconciliation reports, inevitably, we will find differences between the FOS and P&L in the revenue sections of our P&L accounts. A revenue difference in a P&L account is an indication that either your bill was incorrect or your FOS revenue was incorrect. If your bill wasn't matching your FOS revenue, you may have a driver error, an accrual error, or data entry error. Either way, this report won't help you if your revenue drivers or your eFinance tracking is not accurate. So as with all facets of eFinance, we must use great care and proceed with caution when interpreting our data and billing our client. With that said, if you are in a P&L account and you aren't using the P&L billing detail report yet, we want you to get you started on using this report as soon as possible because it will save you time and help improve overall billing accuracy. If you are already using this report, we need to make you aware of some of the limitations of the report so you can ensure contract compliance and billing integrity. At this point, the report can't list everything related to billing. There's simply too much complexity in our contracts. Our developers are working with the FAST team to remove some of those limitations, but it's the nature of our business that some contract parameters just can't be programmed to appear on this report automatically. So now I'm going to pass it back to Carl so he can tell you more about what the report can and can't do.
Thanks, Carrie, and thanks, everybody. We're going to go through what we call the benefits and the limitations of this report. Again, it applies to everybody, even those that are using the report already. Especially if you're already using the report already, let's talk about those important aspects of it. You may or may not have noticed in this screenshot, you can't really see it, it's the red message. We have some problems out there with folks ignoring red message. Don't ignore red messages. Let's take a little closer look at this. You see here, it's still a little small here, but you can read it when you print it out. First, the information on this report is based on data entry and contractual drivers. Please ensure that all rates and other parameters match your current contract. Makes sense, right? That's what we're talking about when we say GIGO, garbage in, garbage out. Read the message. Just because the report says it doesn't automatically mean that everything's perfect. Make sure you understand your drivers and your data entry. Second, it's all about timing. It says calculations run at the close of each day. Please ensure that you do not create your bill until the billing period is complete. This means for P&L accounts, don't create your bill on the last day of the month. Not all calculations have run, and it won't be accurate until the first working day. And if then, only because you have completed all data entry and run the FOS update process. And finally, it just has a reminder about all bills need to be created by the second working day. So in short, don't ignore the red messages. Remember, garbage in, garbage out. Now, this is just a list. Again, I'm not going through this all. It's just a reminder about all the things that are included. Carrie already covered this, but we have to emphasize how much time you're saving by using this report, okay? So what are you waiting for? But with everything, there are limitations. Well, here's a few things that you won't see on the P&L billing detail report, at least not at this moment. We're working on some development items to improve this, maybe automate the whole process from there, but we'll see. Anyway, what you don't get on the report right now, there's no pre-bills or credits for pre-bills. There's no taxes, so if you have tax, you still have to manually calculate that. No VA rebates to the client unless you actually figure that out yourself, figure out that amount and enter it as an estimate and accrual, and also if you enter that amount as bill. No client paid invoices that are reimbursed to the client. And finally, and this is rare, but nothing appears in this report from the accounting memos report if there happens to be something billable on that. This all being said, I still guarantee that it'll save you time in creating your bill at month end. We're working on adding enhancements to close those gaps. So what are you waiting for? If you're in CCL, tell a buddy, bring a friend, get it started. But please reach out to your FAST team member to have them review the report with you, a walkthrough on your month-end billing to make sure that nothing is missed. If you're in MHC, then the report is not available by default. You'll have to ask the FAST team and we'll have to set it live for you. And we have to approve that with the accounting supervisor first. But it's not difficult. Just reach out to us. Before I wrap things up and address any questions, it's important we recognize that these conferences cost money. And for that, we need sponsors. And we encourage you to check out our sponsor link from the main menu. But for now, we actually have a commercial. Well, actually an infomercial. So please check out this message from one of our sponsors.
Hi, welcome to Month End Madness at Greater Accident Memorial Hospital here in Western Maryland. Fred, our food service director, normally does the food service invoice for the client, but this month he went alligator hunting in the Tennessee desert. Yeah. So my name's Kelly, I'm the assistant director, and I've got to get this invoice to the client today. The invoice is easy, but my client expects pages and pages of detailed backup, and Fred forgot to tell me all about that. So now I'm going to spend the next 2 hours trying to find out what reports to give to the client and where they are in eFinance. There has got to be a better way.
Warning, using the client billing package at your unit may result in the following side effects: less time spent behind the desk, more time spent interacting with your staff and patients, less frustration, fewer mistakes, happy clients, happy managers, happy admins, less spreadsheets, more trees in the world, less questions about your invoice. Caution, do not drive or operate heavy machinery while running the client billing package. It's hard to do that while you're holding a computer and printer.
Not to worry, Kelly. We can get you and all the other managers set up for success when it comes to getting these reports together. Say hello to the billing package. The billing package has 55 different reports available for you to set up for your unit, whether it's tracked items, billing, invoicing, retail reports. We can customize it with either one or all 55 reports so that you get the same reports every month. But wait, there's more. The billing package can be set up for a single unit, so we make sure that we give the client the same reports month after month, regardless of who's responsible for printing those reports, or we can set it up for an entire system so that the whole system gets the same reports month after month. Let me show you how you can get your billing package today.
Order your client billing package today. All orders come with a 30-day money-back guarantee, and since the cost is free, you have absolutely nothing to lose. Email fast@compass-usa.com or contact your Fast Team support representative today. Please allow 6 to 8 weeks for delivery. Just kidding, we can usually set up a package within a couple of days. Terms and conditions may apply, whatever that means. Order now!
The billing package is a module in eFinance that can be customized for any unit or group of units. Replacing the need to search and save or print each eFinance report separately, the billing package allows you to access predefined reports in one easy-to-print or save PDF document. Like all reports in eFinance, the billing package can also be downloaded into Excel. There are 55 reports available covering a variety of billing areas. Invoice details, tracked item details and summaries, eFinance payroll reports, and retail reports are just a few of the report categories the billing package can pull from. Once set up, the billing package is located in eFinance under the eFin2 tab in the Reports section within the billing package folder. Once configured, you will have access to the complete billing package going back as far as the unit opening or the beginning of eFinance, whichever happened last. There are many benefits achieved once you have the billing package configured for your unit or system. The biggest benefit is consistency. Same reports, month after month, regardless of who has to produce them. No more forgotten reports. More streamlined information. While we are setting up the package, we can spot reports that give redundant information and work with you to choose the best reports for your application. For systems, it means that all the local clients get the same information every month, eliminating questions as local clients compare information between each other. It also means the corporate client gets the same info as all of the local clients. A clear stream of information system-wide will help eliminate questions brought up because of inconsistent reporting. The billing package can be configured either with or without client invoices. Many times the client wants the invoice presented in a separate document so that it can be processed for payment. These are just a few of the reports available to you. Ask your Fast Team support person for a complete list to choose from. Here's the invoice documents, the fee bill summary detail, client P&L billing detail report, monthly transaction reports. You can have tracked item backup, detailed or summarized reports, including floor stocks, department recs, caterings, and others. The internal transfers or a billable item summary are also available. Retail reports, like the weekly sales report. Labor reports, like weekly and monthly labor summaries, or labor productivity reports. Other reports like food cost and inventory reports, vending sales, resident and patient days, and meals. Interested in the billing package? Contact your Fast Team support person today.
Well, again, thank you to our sponsor. I hope you found that helpful. Remember to reach out to your Fast Team member if you're interested in that client billing package. So today we're going to wrap up what we've learned. So first, automation. It's worth pursuing with an abundance of caution, right? Estimates and accruals, that's crucial for on-site fee bill and the P&L billing detail report. The estimates and accruals quick reference guide is out there. It'll tell you which category to use, whether you select bill or accrue, or positive or negative numbers as well. The on-site fee bill, it's only as accurate as your FOS. Remember this P&L billing detail report. You can use it to save time and improve accuracy. Reach out to us to get connected on that if you're not already. Caution though, the P&L billing detail report doesn't do everything right now. You got to know what the limitations are. And finally, as Ken and Kelly helped us understand, the client billing package is available to group all the reports that your client needs. Now, at this point, I'll open it up to see with Carrie if there's any questions out there. She's actually given me a nod that says there are no questions. So we're going to go ahead and wrap it up. But I want to leave you with this as we leave this session, that we need to be on time for each of the sessions. There's no way to pause or rewind a live stream. So after this session closes, we're going to break for lunch. We hope you enjoy that, right? But we do have the state of the company presentation with Mary Blair coming up right after lunch, and you don't want to miss that. So our recommendation is to please join that session early. We're going to start a countdown timer about 5 minutes before the presentation starts. So you'll see a play icon starting at 5 minutes early on that agenda item. You'll know exactly then how much time you have before the session starts. And remember that all times on the agenda are listed in Eastern time, but if you're in a different time zone, your time will appear to the right. So we look forward to seeing you in the next session. Enjoy your lunch, and thank you, everybody.